Three, we'd have to say it certainly looks good for the financial stocks. We think the result of a yield curve, the argument isn't so much about, or the concern isn't so much about inversion, but rather a steepening of the yield curve. We'd have to say this looks good for banks, the status of the markets, the opportunities for M&A that are being generated, and then the opportunity to see a more conducive to doing business for M&A. This looks M&A supported both by needs likely for combinations and spin-offs as a result of AI and other technological factors, as well as what's going on in terms of policy and deregulation potential. We think financials, look like one of those sectors that is likely to continue, because we started to see it last year, to share the center part on the stage with technology.
Is it all in the price, though, John? And if it is Michelle Bowman as the Fed's new top banking cop, then do we see an added deregulation premium?
Well, I would have to think that a natural premium is likely as regulators become more friendly to the banks. But I think where we are now, we've seen banks make a remarkable recovery from where they were, a year and a half ago, and beyond that. And in the process of that, the valuation, along with the dividends that the sector offers, the dividends offer a good offset in an environment where investors are beginning to favor dividends more favorably as they begin to see the intermediate story from the Fed is a lowering of its benchmark rate. So yeah, it's one of our favorite sectors. Our favorites are communication services, infotech, consumer discretionary, financials, and the one that's been a real laggard for a lot of the time, but sometimes improves intermittently, has been industrials. We're very cyclically inclined here.